Good afternoon, everyone. This is Paige Phelps with Assurity, and today I will be presenting our part 2 topic of our conversation around consumer behavior and the Gallup insights that we can pull and utilize to create additional sales techniques. A few housekeeping items before we get started. Any questions throughout the presentation, please enter into the question box. We'll go ahead and answer those questions for you at the end of the presentation. We want to keep this in a timely fashion for you, so don't expect more than half an hour on the presentation, but we do want those questions in that question box so that everybody gets that benefit of information at the end of the presentation, because some of you may have similar questions. The second part is that we have a follow-up email being sent out after today's presentation with the webinar recording as well as the slide deck. So there will be follow-up materials for you, whether you attended or maybe some of your colleagues registered but didn't get the chance to attend. So know that that follow-up email is coming out on behalf of Assurity, so be watching for that. And finally, if you missed part 1 of our initial presentation a few weeks back on the critical illness piece, it can be found on Assurity's YouTube channel. And so that's where you can find all of our recorded national webinars and have access to these pieces of information, these training topics that we've done in the past. So if you're just joining us today for part 2, don't feel like you missed out by not being a part of part 1. Part 2 is focused on a different market today, utilizing the same insights, and so we'll jump into that as we get the presentation started. So today's focus is all around how to turn Americans' top concerns, as identified by Gallup, into sales prospects. And so our whole goal here is to give you insights from the consumer's perspective and show you different ways that you can approach that in your practices today. So like I mentioned, my name is Paige Phelps. I'm one of the regional sales managers here at Assurity. Like myself, there are 5 other counterparts in addition to me that handle the entire state and entire country. So if you work currently with Assurity and you know your regional sales team, they will be able to help you with that additional information at the end of this presentation. Our hope today is that this kind of gets you some ideas and gets you started on different ways to approach clients and understand their consumer behavior better. So with that, we'll go ahead and jump into the presentation. So one of the things that we want to do and make sure that we kind of point out today and bring back all of this together is take these top concerns that Americans have, that our consumers have, but translate that into how we can proactively approach this. So what's interesting about the Gallup Insight Survey is that it's an annual survey that's done every year, and we've done it every year since 2001. So what's nice about this is that we actually get the data relatively quickly. A lot of times with surveys, you're looking at surveys with previous data who've maybe been a few years back, but this most recent survey actually came out in May of this year, and so it's really nice to be able to have data that we can correlate back to our consumers and use it to develop things out of that in a relatively quick fashion. So the whole goal of that survey is to get an idea of what consumers are thinking, what they believe in, what's concerning for them, just to get an idea on kind of that pulse of where they are in the market right now so that we can approach them with the right tools and techniques to help mitigate their risks. So I think it's a really interesting survey. If you want to read more into that, definitely check it out. It's the Gallup Americans' Top Concerns Insight Survey. But I'm going to pull a couple of things out of here from that survey today to really form our conversation around the risk protection space and how we can utilize tools in Assurity's toolbox to help with that. So as we take a look at the Americans' financial concerns and their financial worries, you'll see arrows here pointing to some of the key ones that we're going to focus on today. But what I thought was important is to really point out the order of concern as well. So you can see that top concern there is not being able to pay those medical costs in the event of serious illness or accident. And the reason I'm showing you these things is to relate it back to what we do as advisors in our day-to-day. Our job is about risk mitigation and risk protection for that client. And so a lot of these concerns that our clients are having are things that we have solutions for with our products and services that we provide. And so I think it's a good kind of reminder to take a look at these things, that this is where the consumer's pain points are, unrelated to the insurance and financial services industry. These are just their general pain points and their feelings. And we know with pain points, we can create solutions. And so this is what's really cool about it, is that we've got some good solutions that we can pull out of this consumer data and consumer behavior today. So like I mentioned, the medical cost is obviously a very serious concern for them right now. And with the uncertainty so much in that health insurance space, I'm sure it's heightened a little bit from that sense. The other thing that's interesting to point out is not being able to maintain the standard of living that that consumer enjoys. So their day-to-day life, and they're worried that at some point that could go away, that that could stop. Not having the money to pay for their monthly bills. So those are their monthly expenses. Those are the things that are consistent that probably contribute to that standard of living that they're enjoying. Not being able to pay their rent, their mortgage, their other housing costs, those things, again, is all encompassed in that standard of living. And then making the minimum payments on their credit cards is another insight that we found. So all of these concerns around money and the financial picture for that consumer, again, resort back to solutions that we have and that we can create for that consumer. And that's what the businesses that we're in is protecting those risks and mitigating those risks for the consumers. And so what that leads me to is a really, really good case for disability insurance. And on our previous webinar, part one of the webinar, we talked about the critical illness aspect of it and how we can protect against some of those financial risks with a lump sum benefit from our critical illness policy. But where I think the rubber really meets the road here in this presentation is the need for disability income insurance and how it can help us solve so many of those concerns by taking care of some of those monthly expenses. Income is the foundation. You know, if we flipped back to that other slide, for everything that that consumer does that they're concerned about, their income is the key driver of that. And so if we know that the income is the key driver of those financial concerns, we need to make sure that that's protected. And that's what disability income insurance does. We can also call it paycheck protection, right? So it's protecting that income, which is the foundation for everything else that that consumer does. And in reality, what's oftentimes interesting is that consumers don't realize that there's an income protection product available for them to help minimize some of these concerns that they have. And so if we take a look at the picture of those financial concerns and another reason behind why they may be concerning, we can look at what the debt ceiling has done right now. And we know that there's $13.21 trillion of debt for Americans. It's at a record high right now. And there's a lot of different things that we can attribute to that. The economy is better, people are spending more, but that doesn't mean that debt's going away. And so some of those factors that contribute to that large debt amount are things like their mortgage, student loans, car loans, credit card payments. There's all of this debt that encompasses kind of the lifestyles that Americans have chosen to live. And so with this record high amount of debt, there needs to be some solution here to help protect that. Now, the other thing that I think is kind of unique when we look at that debt picture, and I'll show you another piece here on the next slide, but when you think of those things that are contributing to that debt, how often do they happen, right? So when we're looking at mortgage debt, we're looking at student loans, those are monthly occurrences, right? They're not happening on an annual basis. They're not long-term payments that are far off in the future. Those are monthly occurrences. They're hitting that consumer every month, and they're front of mind. And so I think the message here is that we have to have a solve and a solution for them that's consistent with how often they have to pay that debt. And so that's where your disability protection comes into play with the monthly benefit that it provides. One of the other interesting things here, I think, when we break it out and we look at the consumer's financial picture, is mortgage debt is kind of an assumed debt, right? If you're going to have a home and you're going to own that home, there's going to be some sort of mortgage debt associated with that. But one of the things that I was really surprised about when we were pulling that data in together is the student loan amount and how quickly that student loan debt is climbing. You can see from this pie chart here that it's the second largest amount of debt that individuals have. And again, that's not a short-term debt. That's a long-term debt that they're going to keep paying for a long period of time. And so it's a monthly expense, but sometimes that student loan debt can almost be as high as a mortgage payment. And so that's kind of the unfortunate reality right now for students who have that education. That debt is also coming in as another additional monthly payment that they have to keep front of mind and have to be concerned with, making sure that those payments get taken care of. And so when you think about it in reality, maybe you have someone who has a college education and has some of that student loan debt. They've worked so hard for that college education. They have their job. They're earning their income, and then something happens. something happens to that income that they've worked so hard for. And that's what we're here to do, is protect. We're here to protect those monthly expenses so that they can maintain their standard of living. So I think the impact that this debt is having on consumers is very significant, and it's something to address, like in those financial concerns, but it's also an opportunity. It's an opportunity for us to tailor something that really fits their needs. This is another interesting piece that I think we definitely need to think about and keep into perspective. When we look at the cost of home ownership, we're looking at the mortgage, the insurance, the utilities, those basic expenses that go into owning a home outside of your monthly grocery bill and things like that. It's just what needs to actually keep that home operating. But if you take a look at this chart, and this really stood out to me, so I want you to think about this for a minute, 90% of these monthly housing costs fall in the $3,000 per month or less space. That's a huge percentage of our demographic that's spending $3,000 or less on those monthly living expenses. Now, that's not to say that those living expenses aren't great. That's a significant amount of our market that we can tap into that has an opportunity for an income protection solve. So my message to you today is that if you take a look at consumer perception, you take a look at the percentage of consumers falling into that $3,000 or less space, you take into account the student loan debt and the mortgage debt, just as two factors that go into their monthly living expenses, it boils down to the fact that it's only going to take a short period of time before a financial pinch is felt if they're not maintaining and meeting those expenses. And so what happens when a consumer loses their income or their income is reduced is that they're feeling that pinch even sooner. And so with research that we actually found that it only takes about 1 month of expenses before a financial pinch is felt. And so that's our opportunity as advisors to provide a solution for them to solve for that, right? So this is where the rubber meets the road for us. This is what we get excited about, is that we can solve some of these problems for them. Now, when we solve these problems for them, we want to do it in a quick and efficient manner, right? So our consumers are going a million miles an hour. They might be running kids to soccer practice. They might be doing dance lessons. They're doing a variety of different things. Time is money, not only for us as the advisor, but for our consumers as well. And so when we look at protecting those clients and their income risk, we need to be able to do it in a convenient and an efficient manner that's attractive to the customer, right? So we keep the customer at the root of all of this. We need to provide them with a solution that works for them, that works for the way that they want to buy. And so I think when we look at disability insurance, oftentimes we have the notion that we have to get into deep product design, or it's going to be full underwriting where we're going to have to do paramed exams and all of this extensive stuff. And we put this notion around ourselves that it's difficult to write a disability policy. When we're thinking that way, we're doing a disservice to our clients. And Assurity, fortunately enough, has a solution to approach these consumers in the way that they want to be approached about purchasing income protection for themselves. And so that's where I think if you're not taking advantage of the Simplified disability product in our portfolio right now, you absolutely should be. And the key reason for that, what really stood out to me, knowing our portfolio when I saw the statistic about 90% of those households being at the $3,000 mark or less, is it fits perfectly with our Simplified disability portfolio, right? So our max benefit issue on that is $3,000. So for us to be able to protect even just one piece of that monthly living expense, it's that household mortgage, utilities, insurance piece of it. If we can just get that protected for them, it's going to alleviate that pain if something does happen. And so my message of disability insurance is never, it has to be the Cadillac policy or it has to be all the riders or anything to that effect. I'm saying get these basic living expenses covered so that they can stay in their home and figure out how to handle all of these other things. It's the bare minimum, in my opinion, to be offering this as an option to your clients in their portfolio. Now, the other thing that we have to keep in mind, too, is that it's a huge service to our clients to be able to offer them that coverage that protects one of those monthly things that's pretty significant for them so that they stay in their home. But it's also important for us to look at this from a business continuation standpoint in our own book of business. If that foundation, that income crumbles for our consumer, all of those other things that we're putting in place for them. Maybe we're working with them on the life insurance piece. Maybe we're working with them from a retirement plan. You could be doing some investments with them. There's a ton of different things that you can do in our industry. But when that income goes away, those other things that you're working on with them are going to suffer as well. And so that's where I think there's a huge opportunity here to do this in a quick and efficient, a simplified process, but to get that bare minimum coverage for them so that you can keep working toward other things. So when we look at the simplified disability product, what's really nice about it is we keep it simple, right? That's the key. So we're breaking it into 2 occupation classes. You don't have to look through the OC guide to kind of figure out what your client fits as, unless they have a really unique occupation that's maybe not apparent. But we break it down into 2 classes. So 1 occupation class and a 2 occupation class. That's going to be your benefit by using a simplified product. We're keeping it easy in terms of the OCs available. The other thing that's nice about this is that the choices in terms of benefit and elimination periods are limited. So it's easier for your consumer to understand and to grasp what they're buying when it comes to the disability piece. Benefit periods, 6 months, 1 year, or 2 years. Elimination periods, 30, 60, 90, or 180 days. And so you're almost creating this opportunity to point and pick with your consumer, which I think is really key when you're trying to do things from a convenience perspective for them. So there's your product specs. That's how the product operates. What I think we also need to talk about is a little bit of product design. Now, your advantage here on the simplified disability product versus a fully underwritten product like our Century Plus is that there aren't a lot of modifications and customizations that you have to make, where you have to get into the weeds on the product design, right? So there's an opportunity here to provide a really solid option for that client and some built-in benefits where you don't have to go and pick all of those things. So for the simplified disability, we have a modified own occupation definition of DEI. Basically, if they can't do their job, they're going to receive their benefit. Now, if they do go do a different job and are earning another income, they won't receive benefit anymore. But know that there's that modified ONOC definition in that simplified product. We can also, I think, an advantage is offer non-tobacco rates for no tobacco use within the last 12 months. So our spectrum on that may be a little bit more condensed than other simplified products. Now, the advantage here that you really get with the Simplified D is the simplified underwriting piece of it. So with simplified underwriting, we're asking a couple of health questions. We're not asking for income and financial verification, and we're not asking for a paramed exam. So you can essentially write these policies, get them that basic coverage, that bare minimum that you feel is comfortable for that individual based off of their monthly expenses, without having to jump through a lot of hoops from an underwriting perspective. So I think that's really cool and adds to that convenience factor as well. There is a built-in partial disability monthly benefit and waiver of premium as well. So when they become disabled, if they become disabled, we're not making them pay premiums for their disability policy while they're using that benefit. So some really nice built-in features that enhance that simplified method of disability insurance. Now, the other cool thing about it is that we do offer a few riders. Traditionally, with simplified products, you may not see as many riders offered on those policies. And so here we have 3 key riders that we feel are really important, actually, to this whole conversation that we're having about consumers' monthly expenses and their perception and their insight for their financial concerns. And so what's awesome about this is that we offer a critical illness benefit rider that pays in addition to that monthly disability rider. So no matter which way you go with this product, maybe you're using the critical illness from part 1, maybe you're using the disability policy from part 2, but our philosophy at Assurity here is to be able to provide those benefits in a way that's efficient for you to not only sell it to the consumer, but for the consumer to understand what their policy entails. So that critical illness benefit rider is an option on the simplified disability product. We also have the retroactive injury rider, which will essentially pay back to day 0 if that insured becomes disabled due to injury or accident. So it's essentially eliminating that elimination period for that consumer if injury or accident is why they are disabled, which I think could be a really cool, potentially huge benefit for that consumer. And then finally, the return of premium option, which I'm going to show you an example of this and how attractive it can be for that consumer. But return of premium, basically just sealing that objection that they might come back with that if I don't use my policy, what's in it for me? And so if they don't use that policy, that's great. That's what we're here to do, protect that risk, make sure that they don't use it. If they have to, it's there. But the return of premium benefit rider kind of answers that question. Well, what if I don't use it? Do I get something back? What's in it for me? What's my return? And so we can actually add that with the simplified product, which I think is really cool. So it still gives that ability for customization within a simplified platform. There are also some service advantages as well. When you work with Assurity, we want to make sure that you really feel a strong sense of service and convenience for how you operate your business. And so one of the things with the simplified platform that we're allowed to do is offer a 4-day service guarantee on that. So if your application comes in clean and in good order, we have all of the necessary materials in order to process that application. If your application isn't processed within 4 business days, the writing agent actually earns $100 from Assurity. So what we do there is enhance that level of service that you're already receiving from Assurity, and keep you on your toes to send us good applications, but it also keeps us on our toes to make sure we're processing your business in an efficient manner. When you're looking at a simplified disability sale, the way you're driving income is all based on volume, right? So you need to write a lot of volume from a premium standpoint to consistently see income on your book of business. And so we want to make sure that that volume is really coming through to you, that's an opportunity with Assurity based on that 4-day service guarantee. So another enhancement from a service perspective for us to you. So kind of just to summarize the need here and wrap this and bring it all together with the consumer back in the focus of our conversation today. When we look at disability and we look at the products and services that we're putting in place for these advisors, the whole basis of this is to protect the risk that they face on a daily basis. One of the things that I think we oftentimes miss, though, is taking a look at the entire family. What we've seen change over the last couple of decades is a shift from a primary breadwinner to a dual income household. And that lends us a lot of opportunity, if we're not approaching it that way already, to make sure that we're covering not one, but both incomes within a household or multiple incomes within a household. I think that's a significant advantage for you as an advisor if you have a current book of business to go back with warm leads and maybe approach the spouse or the other person in that household that contributes to that household income. You think dual income household, sometimes you think husband-wife duo, but you can also think of it from different perspectives. Maybe it's a mom-daughter duo, a single mom, and the mother lives with her. There's income maybe being contributed to that household from different perspectives. So I think we need to take a whole family approach when we're looking at the potential opportunity really for risk protection products within a family, within a household. And what that family looks like might be different today, but that doesn't mean that the income's not there being contributed to. And so I think that need to protect both or multiple incomes is even more prevalent today than it has been in the past. It's so important to make sure that those incomes are protected because they're contributing to the whole household expense. It's just not one or the other. So I think that's something for a takeaway to keep in mind, is to look at the household as a whole picture of what that financial risk protection entails. Okay, so I said I would give you a sales concept. Here's just kind of an idea of what this looks like from a pricing standpoint. So what I did was take a 32-year-old male. That's a very good target age to approach a disability client. They may have a family at that point in time. Maybe they're on their second home. Their income is really important to what they're doing on a daily basis. And so we just took, like I said, the basic bare minimum coverage, so that housing expense. So that's that mortgage, the utilities, and the insurance, so that family can stay in that home, in that structure, and continue to live somewhat of a normal life in their place of home. We used the simplified disability as a solution there. We did a 90-day elimination period, 2-year benefit period, give them enough benefit to get back on their feet and get back to normal. And then I took a look at the return of premium rider because I think it's an additional benefit here. And from a cost perspective, it's not significant. So then what I did was break it down into 3 categories. So you can take a look at this just to give you an idea, an example of 3 different approaches that you could take with that client, kind of like a good, better, best scenario, or putting them into buckets based off of their income. So just to give you an idea, for this individual, if we wanted to cover that $1,900 monthly expense, I'm going to round that up to $2,000. You know, there may be additional expenses there, but that base premium for that individual is $21.89 a month. I mean, just think about that. That's taking your family through McDonald's. You know, there's the amount and the cost to protect and have $2,000 a monthly benefit to keep that mortgage covered is insignificant in the grand scheme of things. But then take a look at the return of premium option. So just by adding that return of premium rider to this policy, we're not increasing that monthly premium by much. That only jumps up to $33.50 per month. So you can see there's a ton of opportunity to really protect a significant risk. You know, if I were to become disabled, lose my income, my home is where I would want to stay. That would be my primary concern. How am I going to make that mortgage payment? And so really for a minimal cost on a monthly basis, you can take that and cover that basic living expense for that individual so that they can stay in that home. So I think there's a really powerful story here to tell that the cost per month to have that type of coverage, to have that mortgage protection essentially, is very minimal in the grand scheme of things when you think about how important that home is to that family. Okay, so we'll wrap up today, and I said we'd be about 30 minutes, and we're almost on it right on the dot. Just want to give out a few reminders about who Assurity is as a company. You know, it's really important to us that as an advisor, you're representing a really strong company and a really strong carrier to your clients. I think it's even more important today in the consumer world to mitigate their financial risk, but also to have a good carrier backing you and products that you can feel comfortable with. And so there are a couple things here that really solidify that about Assurity and tell that story. We do have an A- excellent rating with AM Best. And so the strong financial history is really important to us and has lent us to that excellent score. We also pride ourselves on being that one-stop shop. So today we focused on the consumer insights and how that translates into a disability sale, specifically the Simplified portfolio. But know that we have a lot of different options and opportunities within Assurity's portfolio. We're looking at everything from life insurance, disability, critical illness. There's a lot of different opportunities within that portfolio to find a solution for your client. And then finally, we want to make sure that convenience and a high level of service really is at the root of everything we do. And so because of that, we've created opportunities to offer products on a simplified chassis, on an accelerated underwriting chassis, on a full medical underwriting chassis. And so there's a lot of different opportunities, not only from the product portfolio, but from the way we process the business as well. I think it's so important to have a fine balance and a healthy balance between the product and the service that you receive when working with the carrier. And so I really want you guys to feel that you've got a really strong carrier behind you. When you're representing an Assurity product, you can be confident in the company that you're representing. And so with that, I will wrap it up. And it looks like we actually have quite a few questions here. So if you want to hang around, we will get those questions answered for you. Just a reminder that if you're looking for additional info regarding Assurity, the product portfolio, today's presentation, and you're currently contracted with us, reach out to your regional team for additional information. If you're not currently contracted with us, absolutely reach out to find out more about what those opportunities look like and that ability to get contracted. Keep in mind also that we will have a follow-up email with this webinar recording and the slide deck so that you can utilize this in your own practices. And then if you missed part one of the two-part webinar series, you can find those recordings on the Assurity YouTube channel as well. So with that, thank you for your time today. I will get into these questions and we will go ahead and get these answered for you. So the first question here is an individual from California, and it says, I'm in California and understand that not all options are available in California. What is available? That's an excellent question. So we do actually have our Century Plus personal disability policy available in California. And the nice thing about that is that there are some non-medical limits built into that policy as well. So you can take the same technique that you learned today and apply it just utilizing that product that is approved in that state. The second question here, do we have a list of target occupation prospects? That's a great question and something that your regional team here at Assurity can help with. One of the things when we think about occupations is that sometimes in the disability world, we limit ourselves to what those opportunities actually look like. You think disability, you might think attorneys, dentists, doctors. That's typically what we've always traditionally thought of in the disability space. But what I'm going to challenge you to do today is kind of think outside of that box. At Assurity, we write a ton of different occupations. I had questions this morning about farmers and ranchers, truckers, truck drivers, service managers, operations managers. There's a whole spectrum of individuals that we're not necessarily approaching on a regular basis regarding disability and income protection. And so to me, anybody that earns an income is an excellent target for disability insurance. And so we can help you here at Assurity and with your regional teams formulate a really good list of target occupations. Again, there were some questions about where you find part 1 and part 2 of the 2-part series. Those are on the Assurity YouTube channel, so just a reminder there as well. And then a final question here about income verification at time of claim. So the nice thing about Assurity's underwriting process is that we do all of our underwriting up front. So we're going to take a look at all of those things and make sure that we're making an appropriate underwriting decision on the front end, so that when your client needs their money, they're getting it on the back end at the time of claim when they need it the most. Now, obviously, there's going to be a 2-year contestability period within that. So if they have to make a claim within that 2-year time frame after issue, we'll go back and take a look at everything. But our philosophy is to do that underwriting on the front end so that your client's not waiting for the money on the back end. Again, any marketing materials, approaches for clients, telephone scripts, things like that, your regional team can help work some of those things out for you. I will tell you, in terms of disability marketing materials, a really good site that we put together during Disability Awareness Month that has a lot of great pieces, sales concepts, case studies, and little training videos and things like that is assurityd.com. Again, that website is assurityd.com. I would definitely write that down and take a look at that. That's a really great resource of information that we put together specifically toward disability. So there's some great pieces out there that you can utilize for this concept and to help with those sales and that promotion. All right, and it looks like that's all the questions. So we will go ahead and wrap up and let you guys get back to your day. Enjoy the rest of your week and happy selling. Thanks.